What is up, everybody? Welcome back to the channel. Today we are going to do a emergency market update because the market is dumping so hard and we just need some clarity here. We just need some clarity. We need to know what's up. We got to talk about what's happening right now. Okay. Right now, Bitcoin is sitting at $62,900. Wow. I didn't expect to see Bitcoin at this price, especially in this year. In 2026, I expected Bitcoin to be already at half a million to all the on the way to $1 million, but it's not. We're at 62K. So, is it a fire deal? Yes, I stacked my sats today. I hope you did too. You buy every dip. You have to. Okay, we understand that Bitcoin is the greatest expression of dollar liquidity. Right now, we are in trouble. We are in troubled and trying times, and our financial markets are starting to crumble right in front of our eyes. Our liquidity is tight, and there's something in the plumbing that they're not telling us. Can the would the carry trade be part of this? Okay, so to the ones that don't know, the carry trade is when the yen when people borrow the yen because it is cheap to borrow, and then they put it in assets that can give them a small return because it's cheap to borrow the yen. So let's say they borrow the yen for 1%. As long as they can make 2% on something, they're making their profit back, and they're paying off the loan. So yeah, that's the yen carry trade, and it's currently it's currently unwinding, and that could play a part in what's happening today. And people that are leveraged keep getting rinsed day by day this whole February, man. Like the whole future markets, the derivative markets are all cooked. 775 million liquidated just today. So over $2 billion liquidated in the past week alone, which is nuts. What the macro? So what is happening in the macro sense? Kevin, we're starting to call this Kevin Warsh the hawk. What do I mean by he's the hawk? Okay, when you're dovish, you lower rates and you accept looser monetary policy. When you're hawk, you raise rates and you make monetary policy tighter. You're in favor of tighter monetary policy, right? The market is not expecting a rate cut anymore because people think that Kevin Warsh is hawkish, but I don't think that's the case. If you do the math, the math does not make sense, and they need to print the money, right? They need to do it. There is no way that they're gonna survive this. And Kevin Warsh is also known as the crisis firefighter, so they might have picked him because they know that in times like this, they need someone in the helm who has been in past situations like this. Like he was there in 2008 helping Ben Bernanke make decisions on what's happening. Okay. Since they're raising rates and tightening monetary policy, people are expecting a stronger dollar, and a stronger dollar is not good for us. I mean, because we want Bitcoin to go to $1 billion. What else is happening is the Mag 7 starts to bleed. This past week, there's been a huge tech sell-off due to investors starting to see that these numbers are not adding up and that these valuations are not sustainable. Like right now, the market is starting to realize that these guys were they were chasing to be the best. That it's coming to the point of stagnation where their next upgrades are not going to be as revolutionary as their version 1, version 2s. Because while they were financing all of this, they were projecting insane growth, insane metrics. But now that the time has come, they can't. There's no proof in the pudding. There's no proof of work. It's starting to price it in a more fair price, if that makes sense. But yeah, gold and silver. Gold drops 4% in a day. Silver drops 13% in a day. So, like I said in previous videos, like I I I can't explain why gold is dumping, but I'm starting to see silver dump because they need so much silver for industrial use. It's insane. Like the amount of silver that they use is actually mind blowing. And geopolitical tensions in the Middle East with Iran and the USA. Trump playing his games again. I digress, but whatever. Why such drastic drops? As we said a while ago, we've had 1.7 billion dollars worth of ETF outflows from February 1st to February 5th. 1.7 billion dollars of ETF outflows. But what a lot of people are starting to forget is, dude, didn't BlackRock just request or get approved for a new ETF? So what I think is that these managers were told, like, yo, we're making this new ETF, and then now they're starting to rotate out. They're gonna cash out some at a loss, some at a profit, and then they're gonna move it all back into the new ETF. Because like their IBIT. Their IBIT was their best grossing product ever. So you don't think they're gonna try to pilot into another one? Just some food for thought, guys. Just some food for thought. And we've had $2 billion liquidated on multiple exchanges. $2 billion with a B. Dude, these leverage traders keep getting rinsed every day, bro. Okay, let's move on. Now, let's talk about the carry trade unwinding. So as we're starting to see that the carry trade is starting to unwind right in front of our eyes. What do I mean by that? Okay, this is a kind of long one, but let's lock in. Let's all lock in. Let's lock in. Japan's 40-year government bond yield recently exceeded 4% amid rising volatility in its bond market, signaling that the potential end of cheap yen funding that fueled global carry trades. So what they're saying is that the 40-year bond is now rising. The yield is now rising. So now it is taking more yield to convince these investors to buy the bond. Okay, that is one part. Second part, this shift followed the Bank of Japan's January 23rd policy decision to hold rates near 0.75%. So right now the interest rates are 0.75%. While leaving room for future hikes. That means they plan on hiking rates in the future. That's why they left room for it. Pushing the 10-year JGB, Japanese government bond yield up to 2.25%. So now it takes almost double last year's level to convince the market that the Japanese 10-year is worth buying. So now it takes 2.25% yield to convince the market that the Japanese 10-year bond is worth buying. As you can see, that is currently straining the market liquidity. People are starting to take out their assets and pay off their yen loan. That is what I'm starting to see. And now the system is cracking in real time. Guys, this is very, very important. People don't realize how much of the world's stuff that Japan owns. How much people have borrowed Japanese yen to buy Western assets. Just keep that in mind, guys. Keep that in mind. They have trillions and trillions of dollars worth of this stuff. Just keep that in mind. I move on. On-chain capitulation. As you see here, that let's visualize together all of this pie chart of what we know is the cause of the market disturbance today. We have here the carry trade unwinding, which is 20%, macroeconomics 25%, other stuff I don't know 5%, like things we can't take account of, on-chain pressure 10%, liquidations 10%, ETF outflows 15%, and geopolitical risk 15%. right? This is not a professional chart. Like, I just made this with Perplexity through the verified and credible sources that I know. So always double check info that I give, and always double check info that you read. So what does this mean for you? Bullish or bearish, IDK. I'm not the market maker. I don't control the market. I don't have a crystal ball to tell you what the price will be tomorrow. I don't know. I can't tell you what the price is going to be in a year from now. But what I can do is I can react to what's happening and base my decisions off of first principle thinking, off of my own opinions, from what I hear, from my sources that I trust. What I mean by first principle thinking is I gather information from multiple sources, and I make my own opinion, if that makes sense. And I use that opinion to base my decisions off of. Another thing that I saw on Reddit that really stuck out to me is this quote. It goes, "It is better to pick up the knife rather than catching it. It is better to pick up a falling knife rather than trying to catch it while it's falling. Because what are the chances you're gonna catch it without cutting yourself? It's gotta be tough. Like, there is a chance that you're gonna catch it, but there's also a chance that you're gonna bleed, and you don't want to be part of the blood on the streets. You do not want that. You need to drown out the noise. Start first principle thinking. Start doing your research. Start looking. Start pulling on the thread. Double check the sources. Right? Stop looking online and just believing everything you read. Double check what you read. And yeah, that's all I have to say is to buy the fucking dip. Do not fret. Bitcoin is not going anywhere. We're here to stay. Market correction, ups, downs, we're here for it. I love talking to y'all and trying to keep y'all informed. Please like and subscribe. And today, I want to ask what your strat is in this shaky market that we have, because I want to see what y'all are doing out here, because I'm interested. I'd love to know. That's it for me today. Love y'all. Doggies out. Peace.